My next guest argues, however, that there is a strong case to skip cutting rates next month. For more, let's bring in Michael Darda, chief economist, macro strategist at Roth Capital Partners. Michael, why are you wary, perhaps, or don't think that it is the appropriate time to cut in September?
Thanks for having me on, David. Look, I think they're going to cut 25 basis points in September. It's pretty much fully priced at this juncture. But there was a much stronger case a year ago, in my opinion, because the unemployment rate had been on the ascent. So we had some of these recession models based on the behavior of the unemployment rate starting to flash yellow, even red. And more importantly, from my seat, inflation expectations were 50 basis points lower at the 5-year horizon in the bond market a year ago. So there was a real palpable risk that the Fed was falling behind the curve a year ago, and I just don't think that that sense of urgency is here today. That said, I do think they will do a 25 basis point rate cut, but I think they need to be a little wary about fanning the flames of the expectations built in over the next year for well over 100 basis points of cuts.
And so what do you think we're going to get out of Powell on Friday? Do you think we'll see a change in language in any kind from what we last saw at the press conference?
I think they're going to keep it pretty close to the vest. The macro data has been a bit scattered, but as of now, it looks like Q3 is shaping up to be okay. Consumer spending above 2% in real terms. Real GDP growth also tracking above 2%. And with inflation, probably for the third quarter on the GDP price deflator running just below 3, 5% nominal growth is not an environment I think we're Fed Chair Powell and the others are going to see a sense of urgency to really go out there and project, any kind of a dramatic move lower in rates. So I think he's going to be pretty tight-lipped in terms of the guidance. Data dependency will be the operative term going forward, in my opinion.